Okay, today is the 18th of the 2nd, and the big news of the day is that interest rates have been dropped just a little tiny bit. But it's such big news, it's taken up everything else. Four big banks are going to lower interest rates following the RBA cash rate, but delay will earn them $10 million a day. Now, I don't really want to talk about the interest rate today. There's thousands of places you can go to hear about that. I want to talk about how the whole thing's a scam and how the extremely low interest rates we have today is what's causing the housing crisis. And it's causing the housing crisis because if you actually have money to invest, housing's pretty much the only safe bet you have. Where people used to put their money in long-term fixed bank savings accounts and pull in interest rates of 8, 9 and 10% a year on, say, a 3 to 5 year fixed term account, you can't do that anymore. If you do that, you'll be lucky to get 2%. I haven't looked, so I'm not sure. Let me predicate everything I'm saying with I left school at 13, so what you're getting is the dumb person's idea of how finance works. But it's connected to superannuation in all sorts of ways. In looking into this, I've decided my very next video is going to be on superannuation. But one of the things you should be asking yourself that the media isn't asking and should have been asking for the last 30 years is this one. Just my thing. The video wants to stuff up and not do what I want it to do. Oh, now it's bouncing everywhere. Let's wait for it to stop. That's it. Why don't 30-year fixed mortgage rates exist? They do in the rest of the world. 30-year fixed interest rates basically got stopped offering by the banks around the same time superannuation came in. And the reason that the Australian government just let them do it was because it was their way of compensating the banks, because people are no longer going to be putting money in savings accounts. So that was their payoff. They got to get rid of 30-year fixed interest mortgage rates. Now this is how 30-year fixed mortgage rates work. When we came to Australia, my dad took off and left my mother with 3 little kids and an older kid. And the Housing Commission put my mother in a house, but they gave her a 30-year fixed interest rate loan, which meant when housing interest rates went all the way up to 17%, my mother was still paying, I think it was $28 a month on her home loan, because the home loan repayments in 1972 were the same as the home loan repayments in 1985, were the same as the home loan repayments in 1992, were the same as the home loan repayments in 2002 when my mother finished paying off her home. The price of her loan repayment never changed. The price of everything else changed. Right? That's how a fixed mortgage rate works. One of the issues America has is they dropped interest rates to nothing during the pandemic. Everyone got 30-year fixed mortgage rates, and now nobody's refinancing and buying bigger homes because they're not going to give up those 30-year fixed mortgage rates at 3%, which was 2% than a variable interest rate, more higher, but still, it's over 30 years. So instead of asking everyone having a multiple orgasm over a little bit of a percentage of it coming off your home loan, and yes, it is an extra $100 a month. I have a friend who has a home loan, and I'm very happy for her that she's going to have a couple of $100 extra a month. I don't know how that works out. It must be very hard for everybody in this system. I've never been in this system. The banks wouldn't give me a loan for a $5,000 car, let alone a loan for a house. But yeah, there's this not having 30-year fixed mortgage rates is one of the reasons why we're in a housing crisis. But the other big reason we're in a housing crisis is interest rates and how interest rates connect to investing. So, this is interest rates since 1959 all the way to 2014. This line here is the 5% mark. So between 1959 and 2014, interest rates never, not once, dropped below 5%. Up here is when they hit 17.9% or 5% or something. My mother was still paying home loan interest rates at this rate because she had a fixed interest rate. So my mother got a home loan at this rate, and she never ever got a loan, and her home loan repayment stayed the same all the way up to here when she finished paying it off. All this was when variable interest rates came in, when they first started, because everyone getting new home loans, and this is crazy, so they didn't get fixed home loans. They used that as an excuse to drop 30-year fixed mortgages. It's all very important. Now look at this on the other side of the coin, an investor. So from 1959, now the other thing to remember, if you had a 3-year fixed, a 3-year fixed savings account, so your money was stuck in the bank for 3 years, you were probably getting about 6.5%. But if you did that over 5 years, you were probably getting between 9 and 10%. Right? So between here and up to, when did superannuation come? 1991. So interest rates were up around 10% then. Right, so you were still getting 10% in your... This is the moment when they stop giving you more money for your variable interest loans. It's also the time that superannuation came in. All these moments click. They're very important, right? Now, I'll go to the next one. Just to continue that graph, so this is 1995, that downward graph kept on going all the way down to 5%. Then it started going back up again. No one stressed out about this. This wasn't a big stress, because this is what we call normal variation in housing loan, for the jump between like those two things there. Superannuation's just come in 1992, just in here, right? Interest rates kept on dropping and dropping and dropping and dropping. They go back up, blah 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 blah. We get down to here, and now we're down below 4%. When did the GFC happen? That happened here, so we went right down to 4%. So even at the worst of the GFC, $200 million disappeared from superannuation at this point. Right, so the money that people would have had in fixed term savings account, where $200 billion wouldn't have disappeared, because it was all in superannuation at this point, $200 billion disappeared. God knows how much money disappeared out of the superannuation accounts here. But anyway, we all these people who would have had their money in fixed term bank accounts have nowhere to invest their money but housing. The only safe place they've got to get interest rates up around this level on their investment is housing. If you buy a house, you get 10%. We used to get 10% if you had just saving your money in the bank. Just put it in the bank, you get 10% interest. That's what I was told as a child. Real simple. Save your money, put it in the bank, you gain interest. That's how compound interest works. Instead, they keep on telling us that about superannuation, but every time there's a dip in the stock market, we all lose money. How's that work? Superannuations are rort too, but this is where we're really getting rorted by continually having interest rates so low. So our economy and our money system and everything is in such dire straits. This little drop here, that's the drop we had today. See that? Like, you can hardly notice it. That's today. Our economy is so bad that that's the biggest news. It's going to save the economy, this tiny little drop. Like we're not talking about everyone else who doesn't have a home loan. But for people who have home loans, their life's now rosy because this happened. What a crock of bullshit. What should be, where this should be is up around here, right? And all these people in these lines should be able to get fixed 30-year loans. And then they know exactly. Imagine if you could get a fixed 30-year loan for that line there. You'd be paying 3% for the next 30 years on a loan for your house. But Australia's the only country in the world where that doesn't happen. You're all getting rorted. And that's why you don't get anything like that. Now, the other thing that I keep on hearing today is they want more unemployment. What sort of economy do we live in where they play around with interest rates to induce more unemployment? But yeah, this is from a 2003 article, but it could have been written today. I don't even know what it's in. The Australian Institute. So take that with a grain of salt. But this is the bit I highlighted. I know it sounds like a conspiracy theory. The idea that the RBA would pursue a policy designed to make people lose their jobs. But this is exactly what Deputy Governor and soon-to-be Governor of the Reserve Bank Michelle Bullock said in a recent speech. In her speech, she goes into detail about how they will achieve this. One of the channels through which higher interest rates work is to bring down inflation is by reducing the demand for goods and services and hence overall demand for labour. What this means is that the labour market conditions will invariably soften as inflation is contained. Softer labour market conditions mean more unemployment, an extra 140,000 if unemployment is to get to 4.5%. That's what they want, 4.5% unemployed. What's this article? Australia's housing crisis is driven by lip surface hypocrisy. Oh, this is the housing thing that they had the other day. I've highlighted something here. It is now more than 2 years since Australia's government, federal and state, met to do something about the crisis and launched a national housing accord. Australia is facing acute housing pressures and too many Australians do not have access to affordable housing. This is from the ABC, by the way, 7:30 report. There were 25 parties to the accord. This is what I find funny. Like, you got to be sus on something when all these people are involved. It's real simple to fix housing. Get the Housing Commission involved. The Department of Housing, it's not called that for nothing. Commonwealth, 8 states and territories. Well, that makes sense. 10 super funds, the Local Government Association, 2 big fund managers. Who are the 2 big fund managers? the Masters Builders Association, Housing Industry Association, and a Property Council. This is the line I like the best. Only the last three were serious about it because they stand to make money out of more houses being built. The rest were pretending. So that's from last week's 7:30 thing on housing. And this is my superannuation timeline to show you what I meant about super. In the 1980s, only middle class white collar workers and public servants had superannuation. Common workers didn't. The superannuation guarantee started in 1992, and that's the same time that banks stopped giving you fixed 30-year loans. I just left school at 13. There might be no connection to that thing. Everyone tells me I'm an idiot, and whenever I ask anyone who's got a home loan why we can't get fixed 30-year loans, they look at me like I'm crazy. But all I know is without fixed 30-year loans, my very poor mother who didn't have any money would never have been able to buy a house. This graph's very important. The global financial crisis creates investment losses for Australian superannuation funds of more than $200 billion. That's really spinny. Alright, now this is the money we're all meant to retire on, right? Now all these people, all this money would have probably been in fixed savings accounts and things like that. But when we changed the system to super, we took away 30-year fixed mortgages, and that's why we have a housing crisis. Because all the people who would have been investing this money in standard bank accounts have no choice but to invest it in housing. Why would they put it in here if you can lose 200 billion? The people who didn't put their money in super funds and bought houses didn't lose any money when all this happened. Their house prices were going up 10% a year. And we were all losing our money in super though, weren't we? This is the thing I found very, very interesting. Right, and this chart is why my next video is going to be on superannuation and how that's a raw. Remember how we're all meant to retire on our superannuation? This chart is male and female amounts of money in super, the average amount of money that people have super, right? So in 2004, the average amount of money that people had in super was about $25,000. The average money went up to about $30,000, went down a bit in 2009. This must have been when we all lost $200 billion in our super account. See that? You can actually see it in the graph. That's spinny. And then it goes up a little bit. You know, you got to count for inflation during all this too, people. So 2010s were up to $30,000. 35 say, all the way up to... But anyway, the average amount of money that the average male has in Australia in their superannuation account in 2018 is $75,000. How's anyone going to retire on that? Give them benefit of the doubt. Let's say it's 100 grand now. You know what you get for 100 grand? You can buy yourself a car and maybe a small holiday after with the change. Oh, we've all got to get electric cars. So you can just get a car, that's about it. Because we're going to put a tariff on a car just to be like Donald. But yeah, so how the fuck's anyone going to retire on their super when the average account's like 100 grand? So super's a rort, and the way we do housing's a rort, and Labor government and Liberal government are both guilty of doing this to us. If you have a home loan, go and ask your politician tomorrow why you can't have a 30-year fixed loan. The media's conning you. giving you nervous breakdowns about minute movements in interest rates when you actually look at it. It's better to have interest rates at about 5-6% so that everybody in the system they've taken out savings, and it must have been planned. So the housing crisis we're having today must have been planned, because the ripping away of savings of people, which is how common people used to invest, forcing them to put that money on the stock market, which artificially inflates the prices of stocks. I don't give a rat's ass about the price of stocks, but the government does, and the people who give kickbacks to the government give a damn shit about the price of their stock price. And if you force everybody in a job in Australia to put money in superannuation rather than put it in a fixed term savings account, all that does is force up the price of shares, giving higher wages to people on the board, and now people on the board get $2,000 and $3,000 more than the person working on the shop floor. That's all planned, right? So if you have to miss out on a meal so that you can make your mortgage payment, go and ask your bank, go and ask your politician why everybody in the world can get a 30-year fixed home loan, but you can't. And the reasons the bank tell you is nothing but a pack of lies, because the reason they say they don't offer it is because you don't want it. Would you like to have a 30-year bank loan, home loan fixed at 4%? Because that's what you deserve. Instead, you got a variable home rate that at the best you can fix it for a few years. And if you fix it today, what happens if the bank loans are 17% so when you get a house loan, that's the mental stress you got to put up with day in, day out, day in, day out. That's all planned, because you don't have to do that. You can wait until interest rates are at a level where you can afford a loan for 30 years, and you can go and get a loan, and you'll know they're your repayments for the next 30 years. Meaning if you lost your job, you could probably still work around it and pay your payments. So yeah, you're getting scammed on interest payments, and it doesn't affect me, but it sure affects a hell of a lot of Australians. I left school at 13, so everything I said could be wrong, but I've got a tricky suspicion I'm correct. Goodbye, and remember, if you're entitled to redress, you probably win a civil lawsuit. Please stay away from class actions. Have a wonderful day and stay safe.